I think equities are very pricey. And as a general matter, that means the risk reward is significant. On the other side, the bottom line is I think you're seeing what I would have, in fact, Matt and I think, talked about the last time I was on, the most logical outcome of what's been going on, which is high liquidity, a Federal Reserve that tends to favor much more accommodation and dovishness is a steepening yield curve. And I think the thing to really watch, in my perspective, is just how high interest rates can go even as the Fed cuts. You've seen that 50 basis point cut has actually raised long-term rates rather significantly.
More than 50 basis points,
much
actually,
more than
if you
50.
take a look at the long end.
If you go back...
We're 30 on the 10-year right now.
Yeah, it's wild.
If you go back to the 1992 election, interestingly enough, as George Bush was segueing to Clinton, we were just coming out of a recession, but at that point in time, the yield curve was about 400 basis points steep. I think the if I remember, the 2-year note was sitting around 3 to 3.5, and the long rates were in the 7.5. To me, there's no reason why this type of yield curve is not something we may be looking at, which is a very scary outcome.
With a 7% 10-year.
Why not? I mean, it depends what the inflation numbers are, but you've got to understand we're also looking at this staggering increase in the supply of debt.